It's great to welcome to the program today Scott Lynn, who's the founder and CEO of Masterworks, which we're going to be talking about. We're going to be talking about art and blue chip art, fine art, and so many different things. Scott, it's really great to have you on.
Thanks for having me.
So to start with, I think probably much of my audience understands the idea that there's sort of art that you might grab at a tag sale or at a booth at a farmer's market when they invite a local artist. And then there are really expensive pieces of art. There are priceless pieces of art. There are high-end collectors. But talk a little bit first about the space you're operating in, what sort of pieces we're talking about, the value, how these are transacted. Give us like a sense of the space a little bit.
Yeah, so I guess when you think about the art market today, I would think about what we generally refer to in the industry as just fine art generally. So that's art that's sold by galleries that represent artists, and that's art that's sold through auction. And if you look at the total size of the market, there's roughly $1.7 trillion in asset value, and there's roughly $68 billion in art that sells every single year. So it's this massive industry. It's this massive industry that most people just don't understand that well.
And is the reason people don't understand it because it's completely inaccessible financially to most people, or because it's actually deliberate? In other words, there's somebody who benefits from lack of transparency in the space?
Yeah, it's a good question. So when you think about that $68 billion in art that sells every single year, roughly two-thirds of that is by the top 100 artists. So those are artists like Picasso, Basquiat, Monet, et cetera, sort of household name artists. So those artists obviously are selling today in the millions of dollars. And it really is inaccessible to most people. So if you think about the very typical customer in the art world today, it's usually an ultra wealthy person, and sometimes families that have been collecting for generations.
So when we hear that a certain piece by a top artist, a top 100 artist, like you're talking about, was purchased 10 years ago for $80 million and now it's sold for $120 million. What exactly justifies that increase in price? I mean, is it that the market is literally so small that it's just fickle, and if somebody just happens to want it for 120, it now has gained 40 million? Is it more directly connectable to supply and demand, and as some of these works get older, particularly from artists who are no longer alive, there's just fewer of them in less good condition?
Yeah, it's there's two dynamics really that impact pricing in the art market, or that cause art prices to go up over time. The first dynamic is just the growth of the ultra wealthy, sort of the top 1% around the world. And regardless how you feel about that's a dynamic that is happening.
Yes.
And we do think that our prices are correlated to that. The second thing, which is interesting, is we always get this question, do prices go up when an artist dies? And the short answer is yes, but not necessarily because of the artist dying. That event in itself doesn't really drive prices up. But what does happen is the artist naturally stops producing work. So as soon as the artist stops producing work, supply over time starts shrinking, because a lot of collectors donate works to museums or institutions over time. So you look at an artist like Jackson Pollock is my favorite example. I think the drip paintings, which a lot of people are familiar with, there's something like 21 or 22 drip paintings left in private collections today. All but a couple of those are not even great paintings, but they're still selling for $30 million just because that's all that's left.
There are lots of stories, and I've read some interesting ones about some of these very, very desirable pieces of art being purchased and then essentially taken out of, they're never seen again, so to speak. They go into a private collection. Sometimes even the buyer will keep it in a strategically selected country to avoid, in some cases, certain taxes that may happen when they may transport the piece of art. How do you qualitatively evaluate that aspect of this market and the sort of that desire that some have to buy a piece and then it's essentially taken out of public view forever? Is that something you would call a problem in this space? Is it neither good nor bad? How do you evaluate it?
Yeah, I mean, I think it. Look, we fundamentally at Masterworks we believe in sort of taking the paintings that our investors own and displaying them in public institutions over time. That dynamic does occur, and a lot of the people that are taking works out of circulation are people that are doing it for investment. So I'm not sure. I guess if I would call it necessarily a problem, but I do think there's better ways to display that work and kind of manage it over time.
What do you think is, so, I mean, I'm using language that implies, sort of like personal benefit, but what do you think is in it for a collector to buy a really expensive piece and then immediately loan it to a museum with no intention of ever taking it from the museum? It's essentially on like a permanent loan to a museum. Is it the desire to see their name there as on loan from Joe Schmo? Is it maybe a financial benefit, and they don't really have an interest in the piece of art itself? Like what's in the mind of some of those collectors?
Yeah, I mean, a lot of that is just philanthropic. The vast majority of work that museums receive today is donated by collectors. There's a tax benefit, but most collectors that are donating at least high value works are not really doing it for any financial reason.
Okay, so as an investment, one might imagine, if they don't know that much about this asset class, that because of the sort of limited market, because some of these pieces are so expensive, particularly from the top 100 artists, as you're talking about, that the return on such an asset class would be either erratic or unpredictable or whatever the case may be. What's the truth about this as an investment?
Well, if you look at those top 100 artists that we reference and you compare that against the S&P over the past 20 years, it's slightly outperformed the S&P. So the asset class, from what we see, tends to perform better than public equities in most cases. And it's really interesting if you look at it at the individual artist market level, which is how we tend to segment the market. There's certain artist markets that are appreciating at above 30%, 20%. So just like any other asset class, there's these different pockets which are really interesting within the art market. And I think the thing that's different about the art market compared to venture capital or private equity is the art market today is still relatively unsophisticated. You think about the size of venture private equity, it's a $3.5 trillion asset class, but there's 6,000 firms that help people or institutions allocate to that asset class. Like in the art market, it's $1.7 trillion, but there's nobody that's even securitized a painting up until Masterworks. So we just view it as a lot of opportunity to generate returns simply because there's not really that many people focused on it.
Is the typical downside illiquidity? I mean, the reason I ask is, in general, if there is the potential for a higher return, there's something on the other side of that. Either the money is tied up for a period of time. I mean, how long can I'm reading Naked Money now by Charles Whelan, and he often will go to, on the one hand, you have cash as the most liquid asset because it's already cash. The furthest thing on the other side is a really expensive piece of art, which is even less liquid than a home because not everybody needs expensive pieces of art. The home is likely to be convertible to cash more quickly. Is that what's on the other side of the potentially higher returns?
Yeah, so maybe just to walk through the kind of the life cycle of how we think about investing in a painting. So we'll go out and we'll purchase a painting, usually between $1 and $10 million, by an artist like Basquiat. We then turn around and we sell shares in that painting, and then as you just mentioned, we'll hold the painting for a period of time. Usually, we tell investors to think of that between 3 and 7 years, and then we'll eventually sell the painting. Now, we did just introduce secondary markets for investors in the last 6 months. So we now have people trading shares in these paintings as well. So if an investor needs liquidity or wants to get out before we eventually sell the painting, they can simply sell their shares to someone else in the trading platform.
So pre-Masterworks, the illiquidity was the downside.
I think that's right. Yeah, I think there's the obvious barrier to entry for most people is that these paintings cost millions of dollars, right? So it's this asset class which historically is appreciated and outperform public equities, but the only way you can allocate to it is if you have millions of dollars to buy a painting. So it really was just limited to the ultra wealthy. So I think that's the biggest barrier to entry. And then I would agree, liquidity historically was probably the second.
So now you're sort of alluding to what masterworks does. So let's talk about that. I mean, essentially what you're doing is you've created a way where you are opening up the possibility of investing in this asset class to people who are not super high net worth individuals.
Yeah, and we do, each of the offerings that we do is actually filed with the SEC. So these are qualified public offerings, meaning anyone can invest. So you don't have to be an accredited investor. It's really open to anyone.
How many pieces of art does Masterworks currently have?
I think we're now on our 22nd or 23rd painting. I may have that wrong, but we're doing a painting almost every week now. So we're quickly rolling out offerings back to back at this point.
And if someone says, okay, I want exposure to this asset class, I can't buy an entire painting, so I want to use Masterworks. Talk to me a little bit about the process. How little can one invest? What is, and I guess now this may be changing as you add secondary market offerings, but what you're saying, think about it as 3 to 7 years. Is everybody typically out when you sell the painting, or how does that all work?
Yeah, I guess the getting started process is really simple. You go to the Masterworks website, www.masterworks.io, create an account, have a call with our membership team. Our membership team will talk to the investor about how they're investing today, talk to them about risks on investing in art, decide what the right allocation is for them to the asset class, and then really talk to them about offerings that are on the platform now, what's coming up in the future, and help them think about portfolio construction within art. It's very similar to how you would think about working with an investment advisor for equities, but we just do it with art.
Are there rules of thumb that you think are reasonable when it comes to, when Bitcoin and crypto started being a big thing? You would hear, you don't really want to have more than 6% of assets in crypto because it's very volatile, or, you never want to have more than 15% in cash. I mean, these are rules of thumb. It doesn't necessarily mean that they're universals, but is there some analogy to that in the fine art space?
Yeah, we partnered with Citigroup at the end of 2019 to do a correlation study on the asset class, which helps inform how to think about an allocation model. We've never actually built one ourselves, but Citi did build one, and I believe they concluded that someone should allocate anywhere between 2 to 8% in art, depending on their tolerance for liquidity.
So it's more of a liquidity question than a risk question.
It's more of a liquidity question than a risk question. It's really interesting. If you look at the asset class, we tend to focus on what we call loss rates, like what is the probability of losing money in art, and then we focus on, if you do lose money, what's the magnitude of loss. And what you'll see generally is that art, from a loss rate perspective and from a magnitude of loss perspective, performs much better than public equities, than oil, than real estate, other common asset classes. And I guess maybe that's not necessarily surprising, right? Like if you have someone who's a collector who buys a $10 million Monet, their interest in selling it for less is just usually low. They're already wealthy, but it does exhibit really good quote unquote store of value characteristics.
One of the things that the art world is notorious for is that there are often not only can it take a while to sell a painting or a piece of art, but there are often high commissions that are paid to auction houses. How does that figure into, are you accounting for that when you talk about the returns?
Yeah, it's definitely, I mean, the transaction fees broadly defined in the art market are huge. I mean, I think they go up every year, but I think now, if you were to go into an auction house and purchase a $10 million painting, you would pay something like an 18% commission, which is just insane, right? It's a
crazy.
$1.8 million commission.
Yeah.
So one of the great things about working with Masterworks is due to our relationships with auction houses, we're able to negotiate those away substantially. Same thing if we purchase privately. So, we still pay commissions. Sometimes they're 2, 3, 4, 5%, but they're not usually the standard commission rates.
Is there a defined line between when art becomes an investment and when it's not? I mean, so as like a counterexample, if you go to the local art show and buy something that a local artist made, it seems that it's extremely unlikely that any aspect of that transaction is an investment. If you're talking about Picasso, it clearly is potentially an investment, and it's in the space that you're operating in. What's the line
Yeah.
between those two extremes?
I mean, the career of an artist is it's a challenging career, right? Like, I just gave the stat where roughly two-thirds of the total dollar volume in the art market is from 100 artists who are
Yes.
mostly deceased.
Right. Out of
So,
9 billion people that have ever lived, or whatever the number is. Yeah.
yeah. So you think about, all these kids graduating every year with MFAs. It's a really hard career. You've got to really do it because you love it. So the vast majority of artists that we look at, we don't consider investment grade. And that's even artists that are culturally significant. So for example, one of the things that we learned very early on is that appreciation rates by individual artists tend to follow recency, meaning if you invest in a Rembrandt today, Rembrandt is just not that fashionable. So you won't lose money investing in that painting, but your investment will probably only grow at 1 or 2% a year, maybe in context with inflation. So in today's world, we really focus on art created after World War II. And we tend to focus on artists that have momentum. We tend to focus on artists that have markets above $50 million a year. It's very hard to view sort of $10,000 paintings, $20,000 paintings, even in today's world, $100,000 paintings as investment grade, because it's just too unpredictable.
Is there something about the masterworks approach that is almost like democratizing access to this space, in the sense that with fractional investment, you're opening this up to large swaths of people that could never have access otherwise?
Yeah, I mean, I use that exact word all the time. And I think what's really cool here is, right, we can take a painting that's a culturally significant painting. We can have a couple thousand people essentially purchase the painting, and then we can take the painting to an institution or a museum, hang it on the wall, and it doesn't go out of circulation. So it's a really nice way for people to gain exposure to the asset class, and also for artists to continue exhibiting their work publicly.
Super interesting. We've been speaking with Scott Lynn, who's the founder and CEO of Masterworks, about which you can learn more at masterworks.io. Scott, I really appreciate your time.
Thanks, David.